Hello, YouTube, and thanks for tuning in to the next installment of All Things Trading, the multi-part series dedicated to those who are perhaps interested in getting started trading in the financial markets, or those who perhaps have been doing it for a little while and aren't very good at it. This series promises to shed some light on some of the things you may be doing incorrectly, or perhaps bring a different trading strategy to light that may be more beneficial to you. This series is going to cover everything that you need to become a master of the financial markets. But today, we're going to talk about buying your first stock. So here's what's on deck for this installment. We're going to break down the mechanics of what is involved in purchasing a stock or ETF and the different order types that are associated with them, along with their pros and cons, so that you can decide for yourself which is best for you. So the actual logistics of the purchase, as far as clicking here or clicking there, are going to vary from platform to platform. But there are 6 fundamental elements to a purchase that are going to be consistent amongst all platforms. That is going to be the action, the quantity, the symbol, the order type, perhaps the price depending on the order type, and the TIF. The first 3 are relatively self-explanatory. The action is, what do you want to do? Do you want to buy or do you want to sell? Now, your platform may have other options available to you, like buy to cover or sell short. We're going to get into that later. But since the title of this is how to buy your first stock, we're going to stick with that, keeping it simple for now. Here's an example of what an online order form would look like. You would simply find the action section, and sometimes this is referred to as side, but whether it says side or action, there's going to be a drop-down menu that will allow you to select either buy or sell. So now that you have selected that you wish to buy, the next question is the quantity. Again, self-explanatory. How many shares do you want? So in this example, we have selected that we wish to buy 1,000 shares. But 1,000 shares of what? That question is answered in symbol or ticker symbol. If you recall from the previous video, I gave you the definition of what a ticker symbol is. But if you don't know what the ticker symbol of a particular company is, you could always type in the name of the organization and get the ticker symbol that way just as easy. So in this example, we're using GM or General Motors. So we wish to buy 1,000 shares of General Motors. The next question is, how would we like that served up to us? And that's where order type comes in. Now here's where you'll need to put your thinking cap on. Because when it comes to order type, you'll notice the drop-down menu, and what you're going to find is quite a number of ways that you could have that 1,000 shares of General Motors served up to you. But right now, I'm going to discuss 2. The first, as you can see on your screen, would be a market order. The second is called a limit order. And when you select limit order, you'll see that there is another selection that pops up with it, and that's price. So let's dig into that for a second. A market order is an order seeking execution immediately at the next available market price. A limit order is an order seeking execution at a specific price or better. So when would one use a market order? You would use a market order when getting into the trade is more important than the price. Now, you may be saying to yourself, well, wait a second, isn't price everything in the markets? Not necessarily. Say you are a buy and hold investor, and the only reason you're getting into this particular opportunity is because you feel the price is going to quadruple in the next 10 years. Do you really care whether or not you get into it at 25 bucks or $25.50? Probably not. And you'd also want to use market orders when you're talking about a highly liquid asset to safeguard against drastic price changes, because that right there is the problem. Because remember, a market order is being executed at the next available price. But because prices can change so quickly, especially if something that is not very high in volume, the price that you actually end up paying may be very, very different than the price that you saw on your screen. So what about a limit order? When would you use that? Well, a limit order is when the price that you're paying for the stock is more important than getting into it in the first place. Used as a strategic point of entry. But the problem with that is you run the risk of the price never hitting your target. But if you're not staying in positions very long, a limit order is definitely the way that you want to go. All right, so back to the online order form. We have selected that we wish to buy 1,000 shares of General Motors. And for this particular transaction, we have selected a limit order with a price of $52, meaning that that is our limit. We are not going to spend any more than $52 per share for this particular transaction. So the next question is, how long do you want this order good for? Or time in force, or TIF. As you can see, another drop-down menu with quite a bit of selections here. So let's talk about that for a second. Time in force is the amount of time your broker is spending trying to get your order filled. And no matter how many options appear to you in this field, there are only two that you should be concerning yourself with. Now, the following is for US markets only, okay? And the first time in force option is going to be day. Now, regular market hours are Monday through Friday, 9:30 a.m. to 4 p.m. Eastern Time, excluding holidays. So what that means is that from the moment you submit your order to 4 p.m. Eastern Time, your broker is trying to find a seller for what it is that you're trying to buy. And if 4 o'clock comes and your order hasn't been filled, then it's not going to get filled and will just be canceled. Another time in force option is GTC, or good to close, and that means just that. Your order will be good until you close it. So if 4 o'clock comes and your order hasn't been filled, then your broker is right back at it 9:30 the next morning. Now, of course, this just doesn't go on forever. This will vary from broker to broker, but typically there's a 30 to 90 day shelf life on GTC orders. As far as the others, if you wish to pause the video and jot them down, feel free. But the odds of you taking these type of orders, or even being allowed to place these type of orders, are so slim it's not worth getting into. If you have a question about trading extended hours, leave them in the comments and I'll be sure to address them. But day or GTC, stick with those. Back to the order form. We're almost there. So far, we have selected that we wish to buy 1,000 shares of General Motors as a limit order, and we're not going to pay any more than $52 per share for this transaction, and we want it to be good into the end of the day. Now, what about this? Special instructions. Now, this only applies to limit orders. Limit orders are the only type of order that can be partially filled. So the majority of us are never going to have to worry about this. But in this example, we're looking for 1,000 shares of General Motors at $52 a piece. Well, what if by 4 o'clock your broker is only able to find 800 shares at that price? Well, that is exactly what you're going to get unless otherwise stated in special instructions. So within special instructions, you're going to find either AON or FOK, which stands for all or none, or fill or kill, which is letting your broker know that you're not going to accept anything less than the 1,000 shares that you asked for. It is not a requirement to put anything in that field. Just know that if you leave it blank, you do run the risk of having your order partially filled. So, as far as routing goes, don't even worry about that. But then it's time to review your order. So, you got 1,000 shares, General Motors. Your limit is $52. Your time in force is the day. No special instructions, so it's okay if it gets partially filled. And what the total amount that is going to be deducted from your brokerage account is going to be. Then, once you have confirmed that, you're going to place your order. Once you have submitted your order, it will immediately go into a category called working orders, which is where all orders will be that are awaiting execution. And it can only go into one or two places after that, and that's going to be your filled orders, which in that case, congratulations, you are now an owner of those shares, or it goes into canceled orders, where the time in force has now elapsed and your broker was not able to find a seller that met your buying conditions. So what did we learn today? Well, we learned what a market order is versus a limit order. We know all about time in force, and we know that you don't actually own the stock until the order has been filled. If you have any questions about any of the content in this video, please leave them in the comments below and I will be sure to get an answer to you. Or if you felt that there was something that I missed, leave that in the comments too. But there are many, many more videos to come because there is going to be a lot to cover in order to get you on the road to becoming a master of the financial markets. Thank you so much for watching. And don't forget to subscribe and hit the bell icon so that you can be the first to know when fresh videos are dropping. And please, if you felt that this information was useful, hit that like button. The split second it takes to do that means so much to me and my channel. And we will certainly look forward to seeing you again next time. And until then, stay profitable.